I'm Safi Russell from SDR Consulting Inc., and we're here today on Business Basics Friday. The goal of this session is to provide some value to small business owners in the space of tax, accounting, and general business, and then have an open Q&A at the end.
Hello, everyone. Welcome to Business Basics Friday. I hope you had a great week. If you are here live, go ahead and share in the comments below where you're joining me from. Once again, welcome to Business Basics Friday, and we're going to go ahead and get started. Let me just go ahead and make sure my technology is all squared away. So if you're here on Facebook Live or listening in on Clubhouse, go ahead and share in the comments where you're joining in from. It is December 9th. 43 degrees here in New York, and you know what, for almost mid-December, I'll take it. We're definitely heading in that direction of the cold. So everyone, hope you're staying healthy out there. Well, once again, welcome to Business Basics Friday. I'm Safiatou Russell, founder and CEO of SDR Consulting Inc. Business Basics Friday is a weekly session catered to providing valuable information to business owners, mental health professionals as well. We have a variety of guest speakers that come in and share information and educate you in the many areas of your practice that you may need to manage. Just as a general disclosure, this is for information and education purposes only. No client relationship is being established or any specific advice for your situation. We're not liable for any use of the information provided today. However, if you want to set up a consultation, we can definitely arrange that. As far as my background, I've been in the industry 20 years, and I'm a CPA and enrolled agent, and also have a master's in taxation. SDR Consulting Inc. is a virtual firm. We are based here in New York, but we service clients all over the US. And we mostly work with business owners, especially mental health practice owners, helping them reduce tax and accounting concerns so you can focus on your clients, your own well-being, and growing your practice. As you have questions today, go ahead and put them in the comments. I'll go over them at the end. If you're here on Clubhouse, you can use the chat feature to share your questions or comments. And so today I'm going to be discussing preparing your mental health practice for tax season, because guess what? It is around the corner. And so I'm going to go ahead and share some content here shortly. Let me just go ahead and get that loaded, and we will get started. All right, let's find my Zoom screen. 1 second. Share. There we go. All right, I think we're all squared away now. Screen is shared. I'm just going to wait for that to update so I can make sure you see what I'm talking about. Looks good. And we'll go ahead and get started. So preparing your mental health practice for tax season. Being that we're in December of 2022 at this time, it is an ideal time to get things in place. General disclosure, once again, this is informational, and definitely contact your professional or myself if you need assistance with your specific situation, and no legal advice is being provided here today. A little background about myself. I've been in the industry 20 years and CPA, enrolled agent, master's in taxation. SDR is a virtual firm servicing mental health professionals all over the US. I am married with 2 children, and I love to dance. And if you're on my TikTok page, you'll see that. So I just want to first start out saying, don't let procrastination win, right? It gets the best of all of us, me included. However, this definitely leads to a stressful tax season. You can minimize that stress by getting a head start now so that you can still deal with life and make sure you file on time and not miss out on anything. When you're rushing and trying to do everything in the middle of tax season, you are potentially missing out on deductions, tax write-offs. You also are potentially underreporting income. And when you do that, the IRS can take 2 to 3 years to catch it, send you a notice, and then you're scrambling trying to figure out what happened. By being prepared and organized, it also minimizes the risk of you losing out if you were audited. You know, there are times where audits are random and they just want you to prove what you've put on your return. And if you've kind of rushed and did it without any support, then those things could be denied in terms of the write-offs you had. Or if income isn't properly accounted for, they may pick up extra income. So the more organized you are in doing your taxes and preparing for tax season, the better chance for future success in those battles, and also just making sure everything is accurate. What, number one tip for today, number one tip, know your numbers. Tax preparation is really just a summary of your books and records, for your practice or if you're a traditional business owner. It's reactive, not proactive. It's happening after the fact, right? And so if you're only worrying about your finances at that time, there's not much you can do to take advantage of tax planning and income reducing strategies that may have been taken advantage of in the year that your business was active. Some things could be done after the year's closed out, but it's very minimal. So you want to be more proactive with that. So ideally, you want to track your income and expenses throughout the year. And my suggestion, use a bookkeeping software, or if you don't have a software in place, use a spreadsheet that will definitely keep track of your income and expenses, your net profit or loss, at least on a monthly basis. You don't want to just have a spreadsheet with a bunch of transactions that you're not doing anything with, because that's just the same as having a shoebox or having it handwritten. So you want to have something that definitely can track those things for you. And I'm going to go ahead and drop a link here in the comments for my financial workbook. And so you can definitely check that out. I'm actually going to highlight it at the end and kind of cover some of the things included in the financial workbook that I have created for business owners who don't have a bookkeeping system in place. Second tip, bookkeeping and record keeping. So let's first talk about what is bookkeeping. You may have heard the term, you may not be sure exactly what it actually means. It's really just tracking your company's or practices financial transactions. So the money coming in, the money going out, any personal money you invested and may have withdrawn, your client sales, your patients, and then the ordinary and necessary expenses needed to run your practice or your business. So, your EHR system, your continuing education, CEUs, your subscriptions, your phone service, et cetera. These are things that are ordinary and necessary to run your practice. These are things that should be tracked in your bookkeeping. How do you do bookkeeping? Number one, I suggest you have a system in place. I mean, for $20, $30 a month, I feel it's worth the investment as opposed to the time you're going to spend trying to do it manually. However, manual can work in certain situations. If you are an S corporation partnership, I don't suggest doing manual. I do suggest you definitely have a bookkeeping. If you're a sole proprietor, single member LLC, you may be able to get away with a spreadsheet method. If you are going to use a software, I recommend you get trained by someone if you're going to manage it yourself. I pretty much use QuickBooks Online almost exclusively. And so I do have clients that do their own bookkeeping. We kind of touch base throughout the year, make sure everything looks okay, but they've been properly trained on how to use the platform, because going in just with a cookie cutter subscription can be very overwhelming. And it can lead to improper record keeping, improper books, which then results in improper tax returns. So you're identifying the flow of money back and forth. You want to automate the process with the system, as I mentioned, and you want to be sure you're keeping your business and personal accounts separate, right? That's the first step in identifying how your business is doing, because you can actually see what belongs to your business and not mixing it in with your groceries and other personal expenses. Once you have that separated and you have that system, you want to develop a schedule. So whether it's a bookkeeping platform or a spreadsheet, you want to put it in your calendar, whether it be weekly, bi-weekly, monthly, but I wouldn't go too much further than that, because when you're trying to recollect what happened 2-3 months ago or a year ago, is very difficult. So you want to put it on your calendar, how often that works for you, how often you're going to maintain your bookkeeping records. So I recommend that you definitely start on that now. We're now in December. If you have not done it all year long, it's okay. Take some time before holiday mode kicks in the next couple weeks, couple days, and start, at least give a start. So that way you're not scrambling next year. Number 3, let's talk about the home office deduction. I want to just highlight a few things that are common for business owners who work from home. If you are, a mental health professional providing telehealth services, and you are in business for yourself, have your own practice, or are a contractor with another company, then you may be eligible to deduct the home office deduction. If you are working for someone as a W-2, this does not apply. So what are the requirements? Number 1, you want to measure the space that you're using exclusively and regularly for your business. So it does not have to be a separate office. Maybe you don't have a setup for that. It does need to be a dedicated space. So it cannot be your dining room table that you also have a family dinner at, your kids' playroom, unless it's a corner of that room. So wherever that space is, it could be the corner of a room that's just used with, your computer and or your setup, or it could be a full office, or it could be a full floor. Whatever the square footage of that space is, you want to measure that. Then you want to look at the square footage of your whole home or apartment, and pretty much the overall percentage of those two numbers is going to determine your business use of your home. That percentage is then taken against your common home expenses, such as mortgage, interest, and real estate taxes if you own your home, rent if you don't own, utilities, internet, um, water, electricity, things of that nature. The percentage you come up with from the square footage calculation determines how much of these expenses you can deduct against your business income. Keep in mind, if you are running a loss in your business, you won't be able to add to your loss with the home office deduction, but you can carry forward those expenses. Okay, so we went through all that calculation just now. One other thing I want to mention is you want to definitely use exact totals, not rounded numbers. You don't want to say, okay, well, my utilities on average were $100 a month. Those even numbers are very not common, maybe for rent and things like that. But the reason why a home office can get a bad rap, or the whole red flag concept, is because people overuse it, use rounded numbers, and so you want to be sure you're using accurate numbers. You want to go, once again, I have a tracking sheet for that, which you'll find on that link. You want to go to your bills, and you want to go to the exact amount you paid, the date you paid it, and you want to record that from when you started your business through the end of the year. If you were in business all 12 months, you do that for all 12 months. If you own your home, there's some extra calculations in depreciating the value of your home. And so you want to be sure to work with a professional to calculate those numbers, but you want to definitely take that depreciation, because when you do sell your home, if you were running a business from it, you're supposed to account for that depreciation, whether you took it or not. So you want to be sure to take it. I recommend that you take pictures of your home office, because, people move, right? And let's say you move somewhere and then 2 years later you're audited. What proof do you have, right? The IRS can make a home visit to inspect your home office area. So you want to be sure you have one and that you're using it regularly and exclusively. If you are taxed as a corporation, there's certain ways to account for home office differently than if you're a Schedule C filer. So you want to be sure you have an accountable plan policy in place, which will allow your company to reimburse you for those home office expenses. All right. Let's move on to the next one. So vehicle expenses, something else that's pretty common. This would be applicable for any trips you're taking for business purposes. If you actually go on site to visit your clients, if you have a home office and you also have a physical office, if you have a hybrid model, then the mileage to your office, your in-person office space, can count, as long as you do have that home office. At the end of the day, you want to be sure you are tracking your miles. If you have a personal vehicle that you use for business, you want to track your miles. Why? Because the car isn't 100% business use, right? And so to prove that, the mileage log is what the IRS is going to be looking for to prove your expenses. So there's two ways, depending on your entity structure, that you can account for the vehicle business use: standard mileage, which is a rate set every year by the IRS, or actual expense. Both require you to track your miles. Why? Because if you take standard mileage, you're going to need to know your business mileage amount, and whatever that said rate is for the year you're taking a deduction, that would be your mileage deduction. You don't take mileage in addition to gas, repairs, and maintenance. It's supposed to account for all that. So that's double counting if you do that. And if you decide to go with the actual method, then you're going to need to come up with a business use percentage, which is your business miles over your total miles, times all your gas, all your insurance, all your repairs and maintenance, registration costs. So that method is a lot more detailed in terms of tracking, but once again, it's still limited to your business use, which comes from your mileage tracking. So if you just track your mileage across the board, that's step one. Step two, you can then see which of those deductions make more sense for you. And once again, if you're taxed as a corporation, you need to have an accountable plan policy in place, and you're likely going to be just reimbursed using the standard mileage rate. Okay. If you have a vehicle that is in your business name, there's a lot of stuff out there about buying a car in your business name. All good. but there needs to be ordinary and necessary reason for that. If your business doesn't involve a lot of driving, then it's probably not necessary and ordinary to the nature of your business. But also, if you have personal use of that vehicle, you're supposed to back that out. So if you buy a car in your business name and you only use it 20%, you're really only supposed to deduct 20% of the costs of that vehicle. All right, so this is coming into more of the reporting side and some forms that you should expect. So if you contract for others, you work with a group practice, you're a contractor for an agent, third party. If you just have some sole proprietor type work, if you have an app and you have a side hustle, you'll likely receive one of these 1099 forms for the year that you earned more than $600. So for example, in 2022, there's a new form, which I'll go over secondarily, but the limit is now pretty much $600 across the board. So if you received over $600, if you're not a corporation, and if your payment method was not like through a credit card or a debit card situation, you'll likely get this 1099. This 1099 NEC form is reported to the IRS, and you get a copy of that. You're going to want to compare that form against your records. Hence why knowing your numbers is important, because there's been errors, right? There's been improper amounts reported, and there's also been amounts reported on improper forms. So if you don't work with a professional, if you don't track your own income, sometimes your income can be overstated or understated. You want to make sure your tax return matches that form. If the form is incorrect, it needs to be reissued and amended, because the IRS will compare what you've reported to what's been reported to them. So very important. On the flip side, if you have service providers you work with, contractors, fellow clinicians, an IT professional, a website developer, if you pay that person or company over $600 in a year, and you didn't pay them by a credit or debit card or PayPal, and they're not a corporation, you likely need to issue a 1099 NEC to them. That form is due to the IRS and to the contractor by January 31st each year. So for example, for 2022, January 31st, 2023, this form is due. And if you file it late or don't file it at all, there's penalties on you as the business owner. So you want to be sure to review your records, see who you've paid out expenses to that provided a service. It could be a direct contractor providing, services related to your practice, or it could be just another service provider who assisted your business. The best way to get ahead of that is to have a W-9 form from all your service providers and contractors ahead of time. It's a best practice to get that form before you even pay them. This way, when it comes time to do the filing, you're not scrambling at year end around holiday time trying to get these forms. All right, so W-9, Google W-9, you'll see it right away. It identifies the person's name or the company name, their address, their tax entity type, if they have one, and either their EIN or social security number. That's what's needed for that filing. Now, the newest change where the threshold was lowered is the 1099-K form. This form is issued by merchant providers such as Square, Cash App, PayPal, Simple Practice, where payments are accepted electronically from your clients and then given to you. And so that threshold used to be 20,000 with some other criteria. It is now 600. So many more people will start seeing this 1099-K form to show how much they collected through these merchant providers. And you want to be sure, once again, what you're reporting matches what's on those forms. A lot of times what you're receiving is less their fee. So you want to make sure you break out the amount you earned versus the fees that they charge, because if not, you'll have a matching issue. Okay, so it also is important to not commingle, because when you have personal and business mixed together, you may end up with this tax form with personal income on it, with personal deposits on it that isn't really income, but it's reported under your business or under your social. So even more of a reason to go ahead and separate those business and personal accounts and be prepared for these forms that you're going to receive, and make sure that they're accurate and make sure you are properly accounted for them on your tax return. Okay, file a complete return, right? Some people want to rush to file, and I get it. Maybe you're expecting a refund or need to file for other purposes. And so you just want to be sure you're filing a complete and accurate return. You want to be sure that all of your tax documents have been received. kind of run through what you received for the year. Sometimes people forget common things like unemployment and so on. Certain agencies don't actually send you this in the mail. You have to go online and pull the forms. So you want to go through your accounts, business and personal, and make sure you've picked up everything. If you got interest, if you got dividends, if you had crypto, guess what? All these things are reported on your return. So take your time, make sure all that's in place before you go ahead and file. And I recommend you work with professionals, especially if you're a practice owner or a business owner, unless you have extensive experience in tax preparation for businesses. I recommend to work with a professional so that you can definitely make sure everything's being accounted for, nothing is missed. You can maximize your deductions, and you want to work with a qualified professional. You want to work with someone who is going to sign off on your return as a preparer. And I'll leave it at that. Okay. So before we open up for Q&A, I want to go ahead and share the financial workbooks that are available on the link that I shared. And so you can get an idea of what they include. And if it makes some sense for you, you can go ahead and grab those for purchase. Lastly, this is my contact information if anyone needs to screenshot this screen before I close it out. So that's how you can reach me. You can find me online at Safi Russell CPA. And also you can search SDR Consulting Inc. And you can call the office number to schedule a free introductory call. All right, let me go ahead and get my next screen shared here, and we'll take a look at those workbooks. And then I'll hop in and take a look at any questions you have. Go ahead and put your questions in the comments here, whether in your in Facebook or Clubhouse, so we can look at them together. So first I'm going to discuss my financial workbook. And so this is for those who do not have a bookkeeping system in place. If you've grabbed this workbook already, definitely always feel free to go back and check the link you were sent, because I always can tweak it and have some updates to it. And so ideally, this is for you to track your income and expenses. Now you can either just tally it somewhere else and just put your annual totals right here. And then this way your net profit and loss is calculated, and you can give this to your tax professional. You can also track it by month, by category here. You'll see some of the common categories here on the left, and you can always add additional categories here. Now, this tab here I'll jump to is transaction details. And so if you need to keep track of the transactions individually, that's a good idea as well, especially if you don't have your accounts separated. But if you do need to list accounts transactions separately because you have multiple accounts that you use, you can go ahead and use that. Okay, car and truck. So we spoke about how to account for car and truck expenses. So you can, if you're using actual expenses, tally those amounts for the year here. Overall, you can put your annual totals here for your total business, total personal miles, some information about the vehicle, which will be helpful. If you actually own the vehicle, you may be able to depreciate it if you use the actual expense method. And lastly, if you are going to be tracking your miles, but you still want to keep track of gas and all that, you can use this to track this during the year instead of paying that amount through your business account, which I don't recommend you do unless it truly is a business vehicle. Lastly, you want to track the business account activity if you do have a business account, so your bank balances throughout the year, as well as money you've put in and money you have taken out. This is very important, especially for those who are taxed as S corporations or partnerships. The balance sheet is part of the tax return, and if you don't have one prepared, sometimes it just kind of gets pulled together with the tax return and may not be accurate. So that is the financial workbook. Let me go ahead and pull up the next sheet here and make sure you can all see that. We're going to talk about the home office. And so I recommend it to, track this as well throughout the year so you're not scrambling. And so square footage, business use percentage will calculate here. If you're a homeowner, you'll fill in that homeowner information here. And then those common expenses that I mentioned can be tracked here across the months, come up with the total and your tentative home office deduction there. And then lastly, for those who have rental properties or you've done some Airbnb or things of that nature, it is important to track that as well, because guess what? That needs to be picked up on your return if it's more than 14 days or so. So you can track that annually here by property if you have multiple properties, or you can use the monthly sheet here. There's some important information needed for the property if you own it especially, and then you want to track rent received and all the different expenses that were paid out. All right, so all of these financial workbooks can be found on the link that I popped into the Facebook comments. And so let's go ahead and take any questions you may have. And so I've got one here that says, in terms of the home office calculation. And so, okay, so the calculation itself, we're going to get into a little bit of math here verbally. I'll try to. So you're going to take your home office area and measure that. Let's say that your home office area is 500 square feet, let's just say. And let's say that your whole home is 1,500 square feet. So you'll take 500 over 1,500. You'll do some dividing there, and that's 33%. And so then 33% of those expenses that I mentioned could be deducted through your business if you're using that area exclusively and regularly. Okay, so I hope that helped. If there are any other questions, go ahead and post them now. Otherwise, we'll go ahead and wrap up. And so once again, if you want to grab the financial workbook, if you need that for any of the reasons I covered, you're welcome. And you can go ahead and do that from the link below. If you're watching this on replay and you do have a follow-up question, go ahead and put it in the comments. And also feel free to share this session with a friend if you find that it may be helpful to them. All right, guys. So not seeing any other questions come in, last call. Thank you again for joining me on this Business Basics Friday session regarding preparing your practice for tax season. All right. You're welcome. You're welcome. Thank you guys for joining us. I'm just reviewing the Facebook chat here. All right, it looks like we're all set. So everyone enjoy the rest of your day. Have a great weekend. Happy Friday. And we'll be back next Friday, 12 o'clock Eastern. Go ahead and mark your calendars. I think you're gonna really enjoy the guest speaker joining us. I won't spoil it. Stay tuned for the updates. And then we will be off the last 2 weeks of the year enjoying some family and holiday time. All right, so everyone take care and have a great day. Bye-bye.